Hi folks, and welcome back to Meaningful Money. Okay, still here at Penberth. Probably do another one after this here. Got to make the most of the window without rain, and even though it's a windy day still. We've got one more tax to deal with when it comes to trusts and trustees, and that's inheritance tax. Now, back in 2006, there was a sort of levelling of the trust taxation across the different kinds of trust. And all trusts, pretty much, except for bare trusts, now come under something called the relevant property regime. So all trusts really now are relevant property trusts. Now, what that means as far as inheritance tax is concerned is that there are 3 points in the life of a trust where inheritance tax can become chargeable. So those 3 points are commencement, so when the trust is set up and the money is placed into trust, every 10 years during the life of the trust, and on exit when the trust is closed and the money passed to the beneficiaries. So those are the 3 points in the life of the trust where inheritance tax can become payable. So let's look at commencement first. Now, when we're talking about relevant property trusts, which for the purposes of today I'm going to call discretionary trust, but I probably shouldn't. When we're talking about setting up these trusts, as with all trusts, some money is placed into trust. Now, it doesn't have to be money in cash, it could be shares, it could be a property, a house, say. Now, when that happens, that is called a chargeable lifetime transfer. Now, the calculation is this as far as inheritance tax is concerned. The amount of that transfer, when added to any other transfers done in the preceding 7 years, is all added up, okay? And if that total value is in excess of the nil rate band, then inheritance tax is chargeable at the point the trust is set up. So, let's make the figures easy for myself. Let's say that, let's ignore any previous lifetime transfers, perhaps there wasn't, but let's say that £425 is placed into a relevant property trust. The reason I've picked that figure will become clear in a minute. The nil rate band is £325. So that means the first 325 grand of money put into a trust is tax-free. So if 425,000 is put in, we've got 100,000 of excess over the nil rate band. Now that amount, at the point the trust is set up, is chargeable to inheritance tax, but not at the full amount, but at half the death rates. Now the death rate is 40%, so half the death rate is 20%. So on a £425,000 settlement into a trust, £100,000 of it is chargeable, and it's chargeable at 20%. Okay, so £20,000. Now, if the settlor, the person setting up the trust, dies within 7 years, then another 20% will be chargeable, making the 40% overall. So that's, straightforward enough. Now, depending on the size of the settlement into the trust and any previous transfers made, you may have to notify the revenue. Now, I'm not going to go into the sort of individual rules as to when you do have to and when you don't have to. It's a bit of a pain, but just be aware that if you are going to make a big gift into trust, then you will have to notify the revenue. So that's commencement, the setting up of the trust. Now, the next time inheritance tax might become chargeable is every 10 years during the life of the trust, and that's called a periodic charge. Now, it's a right faff working this out, okay? Just to illustrate the point, it's basically based on something called, what a rubbish turn of phrase. The amount of tax payable is based on something called the aggregate of cumulative hypothetical transfers. Now that, I imagine, means as little to you as it does to me, but let's just say this: the maximum amount of tax you could pay every 10 years as trustees is 6%, and it's 6% on the excess over the nil rate band at that time. So it's 325,000 currently, so the most amount of tax you could pay on a periodic charge is 6%. It's just beyond the scope of this website really to go into the individual details. If you have specific questions, then leave them in the comments and I'll do my best to answer them. The final point at which inheritance tax can become chargeable on a relevant property trust is at exit, so when the trust is wound up and the property within it paid out to the beneficiaries. Now that's called an exit charge, rather predictably, and again the maximum amount that it can be is 6%. It depends on how long that is after the previous 10-year periodic charge or after the original settlement when the trust was set up. So the calculations are, again, beyond the scope of this and beyond the scope of my tiny brain, to be honest, on this lovely Saturday afternoon. So that's inheritance tax as far as a trust is concerned. It can be payable on commencement, every 10 years during the life of the trust, and on exit. Now there are some exceptions, but I'm going to deal with them in the next video. So thank you for watching this one. I'm going to do one more here at Penberth, and then we'll move on. And I think actually we're on now 97, episode 97. So we're heading now very closely towards the big 100th when we've got some announcements to make, and that should be a fun one. So thanks for watching, and I'll see you next time.